We're moving on to activity ratios. What's your activity? How are you doing? How are you doing today? How are you doing? I hope you're doing well. Nice instance to check in on you. Now, these three are related. Cash conversion cycle. What is this? Cash conversion cycle is how quickly can you essentially, right, take all of your accounts, your operations, and turn them to cash. So days in inventory, obviously you want this lower because you don't want your inventory sitting around. Ideally, you would be able to flip your inventory in a day. Days sales and accounts receivable, well, again, you want this lower because you want to be able to collect your money right away. Obviously, it's not going to be that low, but because you got to wait for people to pay you, it's going to be at least like 30 days. And then days of payables outstanding. Now here, you actually want this longer because the longer your payables are outstanding, that means the longer you are holding your own cash and not having to pay it up. You want your cash conversion cycle to be the lowest it can be, and it's important to keep in mind and remember with all of our ratios and formulas. Do you want a high one or a low one? Right? Do you want a number above one or a number below one? Zero. Each ratio has its own rules, right? Now, again, to recap this, days in inventory, this is okay. How long does your inventory on average stay in your warehouse, right? Before it's sold. Calculate that with inventory or average inventory divided by cost of goods sold divided by 365. Days sales and accounts receivable. This can also be referred to as days sales outstanding. Just keep that in mind. We might even see that in this lecture. That's AR, accounts receivable, divided by sales, divided by 365. Again, this is a metric to tell you how many days generally it takes for you to convert your AR to cash, and days payables outstanding, right? How long it takes you, on average, right? How long before your payables are paid down. And you want this lower, right? You want this lower because you want to be able to turn everything into cash. I want to turn everything into cash. I'm going to touch my microphone and have it just spontaneously explode into millions of dollars of cash. But yes, we can't do that, can we? In my world, that's going to be how it works. Now, we've talked about these ratios. Let's run through them in an example. Activity ratios example. As I mentioned, here we are. Silverstone Inc. has annual revenue of $50 million. Cost of goods sold. Okay, let's read the question first. See, as I read questions, and it seems to be a lot of information, I like to read the question. So, calculate the company's days in inventory, days sales in AR, and days of payables outstanding in order to calculate the cash conversion cycle. Okay, so we need the cash conversion cycle, and coincidentally, we need all three of these, and we will do that. So it's just total plug and chug, right? So what I would do is I wouldn't even go back and read the information. I would write out all your formulas, and then from there I would just pick the numbers as you need them. That way you're not falling for any tricks. Now, sure, once you're done with the question, yeah, go through and read and make sure you didn't miss anything. But this is a great way to avoid traps on the exam. Days in inventory. Well, we have our formula because we memorized it. If you don't have it memorized, I know you will. Just take some time. Well, we have $10 million of inventory, as mentioned, an average 10 million of inventory. What is cost of goods sold? Well, cost of goods sold is dictated as 45 million divided by 365. Boom, 81.1 days. Average accounts receivable, we're doing days sales in AR. Average AR is said to be 8 million. 8 million divided by, well, now we have sales, revenue, same thing, divided by 365. Gets us to 58.4 days. Again, this means that generally we have accounts receivable outstanding of 58 days. It takes us that long to turn it to cash. And days payables outstanding, average account payable of 7 million right here, divided by, again, COGS, so 45 million, divided by 365 gets us to 56.8 days. Bring them all together, add, subtract, boom, 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 gets us to 82.7 days. Generally, what is this telling us? It means that generally it takes us about 82.7 days for our whole cycle to turn into cash. Great for a lot of reasons, right? That metric kind of gives you an indication how you can improve. It tells you when you could expect your cash to come in. Lots of practical uses. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.